The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful March 20th at the headquarters of Technical Trading and Investing. It is TFNN.com. And the Fed just came out with their open market comments and their statement, and not much going on. We are going to have an interview starting at 2:30 with the Fed president. And that may move the market if he drops the Tootsie Roll in the punch bowl, but my guess is that he's not going to say anything that either helps or hurts the market. We saw probably the smallest move that I can remember on a Fed announcement coming out after the last few minutes. We were up about 8 points on the S&P cash. We're up about 9 points now, and maybe half a point move. Very light, 2 billion shares as we start the show. Almost 2.1 billion. So we'll say that at 2:07 Eastern time, we'll be tracking the volume to see if anything's happening. A very light day out here. Again, we are just 8 points? 8 points below the all-time high on the S&P cash. How it goes through that or tests it, which I think that there's a pretty big likelihood that we will. Maybe before the end of the day. This volume is going to tell us quite a lot about the way things are working out here. Of course, in, 1974, Voyager 1 is the first spacecraft to begin the endless journey into deep space. It left our solar system in December, and what we're looking at today is it actually... I guess there's a lot of argument about where the solar system ends and where deep space begins and all that. So anywhere you want to look at it, last December, I thought it had left the solar system. Most scientists did. Some people were complaining about radiation belts and all kinds of other who shot John stuff. But even those folks have to admit today that Voyager 1 is now into deep space. If anybody remembers 300 baud modems from the early days of computerdom, it is so far out that the what was a 38,000 baud modem is now at about 100 or 90 baud. So it takes enormous amounts of time to send either images or anything back. It's running on a nuclear power supply. That nuclear power supply will probably run out in about 5-7 years, and that'll be it. But we do have something out there floating around. And if you're watching on Tiger TV, if you remember, they put a gold record on the gold-plated record on the side of the Voyager 1, and it's got a lot of recordings. They've got a picture of from Da Vinci of how humans operate, and kind of interesting. But we are now interstellar Voyagers, albeit it is the drone of the 1970s and the robots. But pretty interesting to think that we can put something out there for, what is that, 40 years? 40 years, a couple of years, 38 years, and still operating fairly strongly. What can you say about it? So, what else do we have? FedEx this morning cut its full year forecast after worse than expected quarterly results. While I'm thinking about it, we've got Oracle after the bell tonight, so we want to be looking at that. But was it FDX? I think it's the symbol. Yeah. And let's see how it's doing now. It wasn't off too bad this morning. Off $7 on the news, down 6.5% at $99.48 for the last tick. But kind of interesting that we're seeing a lot of the big companies move down to and basically tell their employees they no longer can send stuff overnight. I don't know if that's going to cost them more business than not, but a lot of them moving down to lower grade services like ground or even using the U.S. mail. And we'll continue to look at it, but probably the biggest mover out here as far as volume and actual downside to impact the market, but not doing a whole lot. Again, we've got 1556, something like that, on the S&P cash with 2.1 billion shares. Probably not going to see a lot of volume until somewhere after that 3 o'clock Eastern time when Bernanke's done talking and we find out what's happening. We're going to try to link into the Fed feed, maybe play a little bit of that at the bottom of the hour so everybody can listen, and I can listen to and see if there's anything in there that he's talking about. But for the most part, no change in the comments from the Fed, with the exception of, I think, 2 different words. That was the only difference between the previous statement and their statement of today. So not expecting a lot of movement at it. Kind of interesting to see that we are up again on such a light volume. And we'll talk about that in a little bit. Other things in the news. The Supreme Court held the first sale doctrine and upheld it. This was a big case because it had huge implications for all the internet companies and especially software companies. And that was that, and book companies also. But there was a gentleman, his name was like Kurt Stanang. He was from Thailand. He came here to study when he was like 20. What did he do? He found out that the books, same exact books in Thailand, were selling for about a fourth or a half what they sold for in the United States. So he bought up a whole bunch of them, shipped them over to his college, and started selling them to everybody else on the at his same college. He made about $100,000 that way. John Wiley & Sons, who makes a lot of these books for the colleges, sued him for copyright infringement. He literally bought a book, he paid for it, shipped it internationally, and they sued him for it. I suspect that now he's going to get a fat load of cash for his attorneys, and probably John Wiley's probably going to have spent yet a ton of money also. And they're probably not going to recover that. My guess is that he's going to get a huge amount of prior restraint money, and also his lawyers are probably going to put in some monstrous bills to Wiley's and Sons, and over $100,000. And quite correctly, the first sale doctrine, just because you sell somebody a book, then you actually sell it again, you have no right to do that. It was at the height of sophistry to think that that you actually have that kind of implied power for doing it. And of course, a lot of places you can't get that kind of money for the books, so they'll sell them at half the price. They still only take $1 or $2 per book to actually print. So if they get $50 instead of $100 in the United States, they're more than glad to do it. The kind of weird thing here is that they expect people not to take advantage of that. If they're willing to take $50 in Thailand, why aren't they willing to take $50 here? So anyway, the Supreme Court's upheld it. This has a lot of implications for other things like games. And we all know that a lot of the way that games have been sold, they're trying to actually change that for Xbox this fall. I don't know if this one is actually going to be able to be broadly interpreted as going after software, but GameStop has a lot of problems with these new game companies actually licensing instead of selling their games. If someone actually gave you a book under a license, it may be hugely different too. Anyway, you can give me a call at 877-927-6648. That's 877-927-6648 as we wait for the Fed president to do his little dance on the catwalk. In fact, we need to get that song so we come back when he's got it back. So maybe we'll be able to pick it up. But that's my theme song to Ben Bernanke. He does his little dance on the catwalk. He's too sexy for, that's the name of the song, isn't it? I'm too sexy for my I'm too sexy for my Fed. I'm going to have to come up with some words for that. But anyway, we're looking at the rest of the stuff out here. Kind of interesting that we're not seeing a lot of follow-through in Apple today. Apple's off $2.30. Google's up $1.42, so not much action on that. Facebook's off 53 cents. Intel's flat. Microsoft's flat for all purposes. IBM's up $1.54 at $214.98. Expedia's off 62 cents. And Amazon, which we're going to get into here now, is raising its rates for its resellers. I don't know if everybody remembers eBay, but about 2004, eBay was smoking hot. I mean, it was one of the stocks. Everybody was talking about it like they talk about Apple today. It was one of the four horsemen of with Intel and Microsoft and all that, probably around that 2004 area. Intel, you know, the usual suspects that you would turn on the TV and instantly see being talked about by CNBC talking heads. Anyway, eBay decided to go after and raise its rates significantly. And what we saw from eBay was a lot of their business came down. In fact, if they wouldn't have bought PayPal, I think that eBay may not have been able to continue on. But the combination of eBay and PayPal was it. And some people think that eBay should change their name to PayPal. Anyway, eBay is looking at cutting their rates this week. Amazon's actually telling their store front owners that they're going to be raising their rates. Might be looking at eBay a lot closer because basically Amazon's push to shove is having problems with their margins, and they're looking at taking away at some of their actual resellers on their Amazon stores. At the same time, Amazon's looking at dropping the Kindle Fire HD to $99, and it's at for the 7-inch one, it is $200 now. And apparently they're still not getting the kind of penetration that they're looking for. This $99 Kindle HD may be a newer model with a few less features than the current one, but at the same time, it's at $99. It's hard to believe that they're not going to take a big hit for everyone they sell. Of course, that is the model that Xbox and Wii and all the other PS2s, they all wanted to sell a game box that was inexpensive and make the money selling and renting games later. Kindle's going to continue to try to do that, or Amazon is, but Amazon continues to have problems trying to find and be in a market that everybody isn't thinking that they're being attacked on all fronts. Amazingly enough, the CIA has selected Amazon to set up their cloud services. We're going to put all our biggest secrets on Amazon's web cloud services, I guess. I'll have to find out more about that when it comes back. Anyway, give me a call, 877-927-6648, 877-927-6648. Let's have your call. We got plenty of time here before the Fed starts blabbing.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
I'm too sexy for my love, too sexy for my love, love's going to leave me.
And we're ready. Ben Bernanke's walking down the catwalk right now, getting ready to come out and speak. He'll be out in just about 5 minutes. So, yep, there he is. There he is. We see him right now. He's spinning. He's spinning. He's waving his briefcase at us. There he is. He's walking down the catwalk. Anyway, he'll be starting in about 5 minutes, so we'll have to see how that actually works out. But we're gonna have some fun with the Ben Bernanke theme out here. But we'll have to see. Anyway, Cyprus news, a lot of what was going on over the last couple of days was attributed to Cyprus. Of course, they decided to not approve the plan of taking yet everybody's money. Kind of a good parable, at least a warning to the rest of us out there. After 6,000 years of recorded history, socialism has always failed. The idea that we can just endlessly spend money and nothing will ever happen. We've seen Greece and Italy and all the rest of them. Now Cyprus. Cyprus, pretty small potatoes in the scheme of the whole thing, but another place where basically politicians will continue spending money till there is none left and then blame everybody else but themselves. Then they'll try to steal all the money and then everybody will bring out the pitchforks and go after them. And that's basically what's going on now. They had Plan A, which was to take everybody's money out of the banks. Then they had Plan B, which was to sell the good banks that they had and take that money to pay off the bad banks. But that was a drop in the bucket. They've got a couple of 2 or 3 banks in Cyprus that make our banks at the worst part of 2008 look all like wonderful, just wonderful solvent banks. Anyway, that deal made everybody figure out that why they would get some short-term money. They would still have all the same liabilities they had before. No one's going to want to buy all those stinky bank loans that are non-performing. So they came up with C, D, E, and F, which all basically end up being somebody else like Russia throw a bunch of money at them. And it doesn't look like the Russians are deciding that that's the great thing to do. It's unclear whether or not the banks are going to open back up again tomorrow. And if they do, expect a run. So I'm thinking that we're probably going to have a little bit more problems when Cyprus's bank system reopens and they have a run on the bank. I don't think there's anybody worth their salt that would have any confidence that they could get that money back. So I think we may have kind of an interesting day tomorrow, depending on how that works out. Probably the most interesting thing is that that socialism is. I've heard it called a mental disease because as many times as it's tried, it's always failed. And the belief is always, well, we're different. We're going to make it work this time. There is 2 forms of government, or at least economies out there, and one is capitalism, and the other one is socialism. And capitalism is the unequal distribution of assets, and socialism is the equal distribution of misery. We're trying a little bit of that now, and I think we're going to be trying to figure out what happens. The idea of socialism is very sexy, and if you don't think about it or notice that it never worked in the past, it has a very seductive flair out to it. Anyway, we're going to get back to Ben Bernanke when we come back and see if he's got anything to say. Right now, we're kind of sitting on a market that is flat. What do we got there? Up a little bit now. 1560. I suspect by the end of the day we will be testing 1566 on the S&P cash, and it's going to be all about what the volume looks like. But again, Cyprus could come back in and put a pall in this market if you get a run on the banks, which is very possible. They're talking about opening them up Of course, it's, 6 hours ahead of us. So I suspect that when we come in tomorrow morning, we'll also know what's going on. After the bell tonight is Oracle, so we'll take a little look at that in the second half hour of the show, and we'll try to get and find out what Ben Bernanke's actually saying. Maybe we can get our feed directly from the Fed on here in the next couple of minutes. If we do, we'll listen to what he has to say, if there's anything interesting. But again, this is he's going to answer a few questions, so maybe we'll actually get one that he'll answer honestly. At least I'm hoping he does, instead of all the happy talk. Anyway, we'll be back in a minute. You can give me a call, 877-927-6648. 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And since he's been so rude to have his announcement and his press release during the show, we're going to fade right into Ben Bernanke. Hopefully, if we bring it up, yep, there he is.
To take on excessive
I'll butt in
risk
if there's anything interesting to talk about.
In the committee's view, these costs remain manageable, but will continue to be monitored and we will take them into appropriate account as we determine the size, pace, and composition of our asset purchases. As for today, our policy decision had two main elements. First, the committee decided to continue purchasing additional agency mortgage-backed securities at a pace of $40 billion per month and longer-term Treasury securities at a pace of $45 billion per month. It bears emphasizing that the committee has described this program in terms of a monthly pace of purchases rather than as a total amount of expected purchases, and has tied the evolution of the program to economic criteria, specifically to the achievement of a substantial improvement in the outlook for the labor market in a context of price stability. Within this framework, the committee could vary the pace of purchases as progress is made toward its economic objectives, or if its assessment of the efficacy and costs of the program changes. At this meeting, the committee judged that no adjustment was warranted. Second, the committee kept the target for the federal funds rate at 0 to 1/4% and reaffirmed its expectation that a highly accommodative stance of monetary policy will remain appropriate for a considerable time after the asset purchase program ends and the economic recovery strengthens. In particular, we anticipate that this exceptionally low range for the funds rate will be appropriate at least as long as the unemployment rate remains above 6.5%. Inflation between 1 and 2 years ahead is projected to be no more than half percentage point above the committee's longer-run inflation goal of 2%, and longer-term inflation expectations continue to be well anchored. I should note, as I have on other occasions, that the economic conditions provided in this forward guidance are thresholds, not triggers. Crossing one or more of these thresholds will not lead automatically to an increase in rates. Rather, the committee will assess at that time whether the outlook justifies raising its target for the federal funds rate. This guidance will help market participants assess how the Federal Reserve's interest rate policy is likely to respond to economic developments, but its broader purpose is to assure households and businesses that monetary policy will continue to support the recovery even as the pace of economic growth and job creation picks up. In their individual projections, 14 of the 19 FOMC participants saw the first increase in the target for the federal funds rate as occurring in 2015 or 2016. Let me comment briefly on how the two main pieces of our policy accommodation, asset purchases and guidance about future changes in the federal funds rate, fit together. The purpose of the asset purchases is to increase the economy's near-term momentum with the goal of improving the outlook for the labor market and helping to promote a self-sustaining recovery with price stability. The forward rate guidance, in turn, provides information about when the committee will begin considering the removal of policy accommodation through increases in the target for the federal funds rate. Importantly, the committee expects a considerable interval to pass between the time when the committee will cease adding accommodation through asset purchases and the time when it will be appropriate to begin removing accommodation by moving a federal funds rate target toward more normal levels. As always, in deciding on the appropriate stance of policy, the committee will take a balanced approach consistent with its longer-run goals of maximum employment and inflation of 2%. In sum, the committee anticipates moderate economic growth supported by household and business spending and a strengthening housing sector. The labor market has shown signs of improvement in recent months, but the unemployment rate remains elevated. Inflation is expected to remain low and fiscal policy has become somewhat more restrictive. In light of its outlook and following a review of the efficacy and costs of additional asset purchases, the committee today reaffirmed its asset purchase program and its federal funds guidance. Thank you very much. I'd be glad to take your questions.
Go to Yvonne and then we'll go to Robin.
Yvonne.
Hi, Lon Murray, Washington Post. My question is around QE. Obviously, we've seen some of your colleagues give more specific criteria, give some color around what they're looking for before they would consider exiting from QE. Can you give us any additional color on what you're looking for specifically in terms of substantial improvement in the labor market? And does the fact that there aren't thresholds associated with QE say anything about the level of disagreement among the committee members over what that exit should look like?
Well, to take your second question first, the lack of thresholds comes from the complexity of the problem. On the one hand, we have benefits which are associated with improvements in the economy, but there are also costs associated with unconventional policy, such as potential effects on financial stability, which are hard to quantify and which people have different views about. So to this point, we've not been able to give quantitative thresholds for the asset purchases in the same way that we have for the federal funds rate target. We're going to continue to try to provide information as we go forward. In particular, as I mentioned today, as we make progress towards our objective, we may adjust the flow rate of purchases month to month to appropriately calibrate the amount of accommodation we're providing given the outlook for the labor market. In terms of further color, again, given the complexity of the issue, we've not given quantitative analysis or quantitative thresholds. I would say that we'll be looking for sustained improvement in a range of key labor market indicators, including obviously payrolls, unemployment rate, but also others like the hiring rate, claims for unemployment insurance, quit rates, wage rates, and so on. Be looking for sustained improvement across a range of indicators and in a way that's taking place throughout the economy. And since we're looking at the outlook, we're looking at the prospects rather than the current state of the labor market, we'll also be looking at things like growth to try to understand whether there's sufficient momentum in the economy to provide demand for labor going forward. So that will allow us to look through perhaps some temporary fluctuations associated with short-term shocks or problems.
Robin Harding from the Financial Times. Mr. Chairman, to follow up on that last point, you referred to the possibility of varying purchases and the rate of purchases per month. What's the difference in the conditions that would induce you to do that as opposed to the substantial improvement in the labour market that would induce you to stop the programme altogether? Thank you.
Well, the problem with having just a single criterion is that it's all or nothing. We maintain full speed ahead until we hit a certain target, and then, we stop. That would be, I think, very difficult for the markets to understand, to anticipate. We think it makes more sense to have our policy variable, which is the rate of flow of purchases, respond in a more continuous or sensitive way to changes in the outlook. So as we make progress towards our ultimate objective of substantial improvement, we may adjust the rate of flow of purchases accordingly. Now, we won't do that every meeting. We won't do that frequently. But when we see that the conditions or the situation has changed in a meaningful way, then we may well adjust the pace of purchases in order to keep the level of accommodation consistent with the outlook, and secondly, to help provide the markets with some sense of progress, how much progress is being made, so that they can make better judgments.
But could you define progress towards at all, and are you near that?
Well, as I just described what I mean by substantial improvement, it's a broad-based improvement in a range of indicators, as well as improvement in output and labor demand. So as we move, we see partial improvement, we see modest improvement, as we see a period in which the labor market...
Yeah, we're going to get into the weeds here with the Fed announcement, but I think probably the interesting thing is going to vary how much they actually buy per month, depending on what the market does. So they're not going to say that they're going to spend less, but it sounds to me like they're going to spend less. So we've got a market that's kind of stuck here, but I imagine that this whole press conference is going to be a lot of in-the-weeds stuff about, won't you tell us? And the answer will be, no, we are not going to tell you, and that'll be the end of it. But probably the interesting part is they're going to throttle the amount of money coming in and out of the market. We've got 1560 on the S&P cash. We're holding fairly steady, so we're going to look at some of the other stocks going on. I don't think there's a lot more to be found in his meeting out here, although I've got it rolling on the background. Anyway, what do we have? Wanted to look at a few stocks that were moving here today. And let's see, where's that? There it is. The first one is CIE, which is Cobalt International Energy. They had a oil discovery from a recently drilled Shenandoah thing, 1,000 feet of net pay, high quality, has 20% working in the well. Anyway, a nice little well coming out there, coming out and getting very close to the two previous highs. What was interesting is it did test the July 31st high of last year in December, and it came in with about a little less than half the volume that it needed to hold that high. It's been pulling back since then. It's popped up, needed 9.2 million shares to get into that high. It's still just under $1 away, but 10 million shares today. Not holding those highs, but it is in that huge peak from July 31st of last year. Adobe came out with some fairly decent news last night in their earnings, and they've popped out. This is a nice gap. It's got some nice volume. More of a shooting star, so you'd watch this to see whether or not this thing closes or opens tomorrow morning much lower, gives a lot of that back. If not, you probably have maybe a slow pullback to that $41 range where you might be able to buy that stock again. Let's see, what else do we have? Large cap losers. We talked about FDX. Let's look at the chart here real quick to see how it's doing. Of course, this one fell out of bed on the, basically, the earnings were like 640, and they said that they're going to do more like 615. So off fairly strongly, huge volume today. And again, we've talked about these exhaustion moves. They happen with a huge, the highest volume you normally see. The last exhaustion move, which has always made me nervous in FedEx, was this one that got tested a few days after it happened in 2011, actually in September 22nd. And you can say that's a test, but normally you get retested after a while. This may be in a larger trading range from that 64.07 low of October 4th, 2011, and this high out here. Of course, that's a long move over time, but also very interesting. I think this is probably headed immediately over time, probably in the next 30, 60 days. Probably going to find this thing down around the $92 level in that mid-cap gainers. Best Buy, or no, I can't even say it, BlackBerry, since it used to be RIM, BBRY. Problematic in that this is a pop again today from a upgrade. I don't believe it. The margins are very thin. When we look at Apple and its iPhones, still the big iPhone still in the 55% profit margin. RIM, even their new product with all the effort they put into it, continues to struggle to get 20% profit margins, which are the kind of thing you have in a stereo receiver or a TV or something like that. It's not the kind of margins you would expect for a very hot, high-tech item. But it's going to continue to be extremely short. I think it's always got somewhere between 30 and 40% short interest, so this thing's going to bounce around a while. Normally, when people start covering the shorts and getting out of it is when the stock has a tendency to fall out of bed. I suspect that we're going to see sales in 60 days, 90 days come up far short of what research is talking about now. This is a huge distribution cycle, and over probably the next 2 years, this thing is headed probably to bankruptcy. So just be very careful about looking at research in motion. Zynga was downgraded today. Not a whole lot of movement out there, but again, I think the optimism of getting a lot of businesses now face the cold, hard reality of it being maybe another year before there's people actually gambling and revenues are actually coming in for Zynga. Also, a little bit of pressure from Electronic Arts, who actually came out also and was talking about getting into this space that Zynga's in. In fact, probably need to look at that if I can. What is it? Electronic Arts. Is it EA? Electronic Arts. Got it? I just spelled it wrong. Electronic. Where's it at? Yeah, it's just EA. I should have just typed it in. EA came out with their earnings, and of course the CEO has quit. We'll talk about this when he came back, because actually did a lot of work in the mid-'80s, late to mid-'80s, for Electronic Arts. And we'll talk about the first CEO that I bumped into a lot back in those days. His name was Trip, and we'll be back in just a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, Winners find a way. Find your way to mastering probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
As we were talking and during the break, got to watch a little bit of Bernanke's testimony. Doesn't look like there's much left to affect the market. Pretty much stuck at 1560 on the S&P cash. I suspect when he's done, we're probably going to get a little bit of a rally into that 1566 level, which is the all-time high on the S&P cash. The only news is that he will be throttling up and down the amount of money, and doesn't necessarily think that it's got to be a fixed amount now. And not too much reaction to that. I think there would be a little bit more. If I were him, I'd be very worried about the bubble that he's putting back into the Miami skyline again, and the bubble in several other areas of the marketplace. But, you know, if you're in for a penny, you're in for a pound, and I think that the worst part is these Fed guys have never figured out when it was time to put on the brakes or when there was a problem coming. Always very late to the party, watching their indicators. So I'd be worried about that now. I think that he probably should put the brakes on just a tad to see what the reaction is in this market. But certainly needs to cut down on the cash going in to the Miami skyline and some of these other places that is creating the same kind of bubble that we've seen there since 1925 and buying swampland. Anyway, we're talking about Electronic Arts just before I left. EA, of course, came out yesterday and had disappointing earnings. I actually worked with EA 86, 87, 88. And they had a product called Deluxe Paint. It was kind of the first painting program for a PC. At that time, it was for the Amiga computer. I worked with the programmer and some of the people at EA to get it out and do some tutorials on it. It was still kind of one of the best paint packages, easy paint packages out there. And I think it sold for like $45 or $50. It was quite a hoot back then. To think that you could paint on your PC and even do some small animations. Anyway, the gentleman that worked there was a former Apple employee, Trip Hawkins, and he pretty much had the heyday of Electronic Arts' original computer boom, and finally got forced out. But he was the guy that basically came up with a lot of the ideas that were used in Apple over the next 15 or 20 years. A lot of people give Steve Jobs full credit, and I have to tell you that there was a lot of what Trip Hawkins left in the early days at Apple that permeated the way that they did things. Maybe they did it better than Trip Hawkins did, but I don't think there was a CEO position for him, so he left Apple to go work at Electronic Arts. Anyway, this thing came down on horrendous volume. Again, we're going to go sideways. I suspect that you're probably looking at probably around the $15 mark to 15 and a half is where you're going to find support in this over time. Probably going to go sideways for a little bit. The Electronic Arts CEO did quit. They are still looking for a new CEO, and normally not a great thing that a lot of people want to invest in. They're more than willing to take their cash out and wait until they get the new CEO and see if they like him or not. So I would imagine this is going to be under pressure for a while, but not a lot of reaction today after yesterday's huge sell-off on, what was that, volume? It seems like this thing moves on one-day volume of about 20 million shares yesterday, and of course we're less than 4 million on it today. Again, we're looking at the market not moving much, 2.5 billion shares on the consolidated tape, which comes out to another quiet day. I suspect we're going to see a lot of volume just when Bernanke quits talking, and probably a push-up either at the close today or tomorrow morning for that 1566 level for the all-time high on the S&P cash. We're going to get a good test, and we're going to know what to do then. We'll be back and see you tomorrow.